Home builder confidence in the market for newly built single-family homes clocked in at 46 in December, unchanged from the prior month's reading. This is according to the National Association of Home Builders, or NAHB. But the component that measures sales expectations in the next 6 months rose 3 points to 66, the highest level since April of 2022. Here to dig into the data is Jim Tobin, CEO of the National Association of Home Builders. Jim, good to have you back on the program here with us. Just want to get your read in here on the housing market.
Well, good morning, Brad. Thanks for having me. So interesting, not that we saw an unchanged number between November and the December reading. A little surprising in the sense that, post-election, we saw a bump in some of the respondents. So I think it speaks to the fact that while the political climate for the respondents may be looking a little up, especially when you look at what the stock market's done over the last month since the election, I still think we're, interest rates, whether the Fed, even though we anticipate the Fed will cut that quarter point tomorrow, what future cuts look like, I still think uncertainty is keeping builder sentiment a little bit low. But you can see in those future readings, there is some optimism out there.
Something that you had mentioned within the release and your team had published was the lack of buildable lots continuing to be a headwind. For how long do you anticipate that can persist?
Well, I think we're going to see that certainly as we move into 2025 and into 2026. With the persistent lack of lots, or at least I'll say affordable lots, really that's the lifeblood of the industry is land. You add on to labor and of course regulations and NIMBYism, and you have the makings for a difficult housing market moving forward. But I think if we look at ways that we can release those lots, I think that is the one thing I would ask local governments to do is we get ready for what I think is going to be a golden age of housing production over the next 4 or 5 years. We really need to get those pieces of land in the pipeline now, and we need to get them in there affordably so that we can meet demand in the future.
What's going to be the core catalyst that kind of drives the production of those homes, not just better homes, but also homes that can be delivered quicker as well, to make sure that we're actually kind of balancing out the supply glut right now?
Well, we anticipate, we anticipate that demand will start to come back slowly in 2025, even though it's going to be bumpy. We're now forecasting mortgage rates to probably stay in the 6% band, by the end of the year. So a year from now, we should be, just above 6%. But I think as demand begins to come back, I really think that what we're going to have to see is an increase in technology, whether it's panelization or just building materials in general getting cheaper. That will help us build those houses faster. I also think we're really going to need to see more labor move into the construction sector if we're going to see an increased pace in the ability to deliver homes quicker. That's, there's so many headwinds when it comes to delivering delivering homes. 10 years ago, it was 90 days or 100 days to deliver a house. Now we're looking closer to 6 months. A lot of factors, but labor is going to be one of those that we're going to need to solve in the short term.
It seems like for some of the mortgage rate buy-downs, new home builders have really been focusing on that as a way to try and generate demand here even more so, given the affordability side of the equation that many consumers have been staying on the sidelines over. That considered, do you think there need to be more incentives that get talked about by the incoming president, that get talked about by Congress, in order to really make sure that these new home buyers have an opportunity despite the affordability issues that persist?
I think when I want the government to get involved in housing, I'm looking at it from the supply side right now. We don't need any more demand. Demand is right under the surface. Interest rates and high interest rates have really suppressed that. But as rates fall over the course of the year, or course of next year, I believe demand's going to come back. So what we need is ways to make sure that we're increasing supply. The ultimate affordability tool is more supply. It's not more demand side issues. It's not about tax breaks. It's not about down payment assistance. It really is about putting more product at a cheaper price, into the marketplace. And that is really what's going to drive down houses and increase the affordability and bring more people into the market. Plus, as rates fall, I think we're going to hopefully see the existing housing market start to unwind a little bit. So many people were rate locked with their 3 or 4% mortgages. As rates fall, I think people are going to start taking a chance on economic activity, and that really will help that whole churn in the marketplace and not just focus on new homes.
Jim, thanks so much for taking the time. Always a pleasure to speak with you and get some more context on the reading here.
Thank you.